Hello everyone, hope you have seen our SCS introduction video, then seen our SCS how to use the I can statements video, then hope you have seen the introduction to the revision course, how you're supposed to study. And now I welcome you to E3 revision. So this first section is going to run you through everything that you're supposed to know about E3 in a very case study specific way. E3, as you know, is a major pillar for your case study exam. So make sure you have the case study specifics knowledge in your mind. So topic number one is process of strategy formulation. How do you formulate a strategy? Remember, for your case study exam, it's not very specific. It's your job to explain. So they're not going to ask you define what is strategy. But as a very simple explanation, you can remember that strategy is how you use the resources to achieve a specific objective. Then, strategy involves resources such as assets, employees, cash. It involves environment such as political, economical, customer, competitor. It involves stakeholders, anybody who is interested in your organization. So whenever in the exam, in the case study exam, they come up with a scenario where they're mentioning forming a strategy, you can include one small line which says, whenever we are deciding strategy for our company, we need to take into account resources, environments, and stakeholders. See how simple it is when you can quickly relate it. You don't need the specifics, but there should be a light bulb when the word strategy comes about. So, what are the characteristics of any strategic decision? It affects the entire scope of the organization. It matches the organization to its environment and it looks at the capabilities of the organization. So, roughly, a strategy is how you use your resources for the future. It involves resources, environments, stakeholders, and its characteristics are that it's affected by the scope of the organization, by the environment, and it needs to be considered in the longer term. Moving on to levels of strategy. This is something that you need to know. So, levels of strategy is the three levels where decisions are taken. The first and the topmost level is the corporate level. Remember, as a strategic manager, a senior manager, which is going to be your role in the case study exam, you will be focusing on corporate level decisions. So your job will be to advise on acquisitions, disposals, diversification, entering new industries, leaving industries at the top. So your job is of the advisory at the top. Second level is business level. So business strategy is how the organization can compete and looking at individual markets. So it deals with competitive advantage, looking at competitors, and deals with business units, SBUs. So strategic business units and competition is looked at in the business level. Third is the functional level decision making, which is the day-to-day decisions, HR, budgeting, variances. This is the lowest level. So remember, your role is going to be to advise at the corporate level, at the strategic level in this exam. So hope you're seeing that I'm not focusing on the details. I'm picking each topic, trying to remember it, memorize it in my own simple words. That's what this exam is about. So let's say now there is a scenario of strategic planning process. They ask you that your organization is looking at strategic planning and it's looking for a process to follow. So you can tell them that the first process that our organization can look at is the rational model. So this is the step-by-step approach where you go in steps. You first set the mission, you then look at the opportunities, threats, strengths and weaknesses, so SWOT. You then look at the different options that are available. You choose from those options. You implement that option and then you review and control. So as you can see, the first method that you suggested was the rational model method, which is the step-by-step approach. So what are the advantages of this model? It forces you to look ahead, so future looking. It improves your control. It identifies risks for your organization because you're looking at the SWOT, and it encourages creativity. So planning process first is rational model. On the other hand, the disadvantages of the rational model are that there are short-term pressures, it's costly, there is rigidity, it's time consuming. So each model has its advantages and disadvantages. Second method I can look at is the emergent approach. So if I don't want to follow the rational model, I follow the emergent approach, which means I look for an opportunity in the market and I take it. So my business has a set plan. For example, I produce motorcycles. So I keep producing motorcycles. If I see a demand in the market for a particular type of motorcycle, I will take it. So I see an emerging strategy and I pick it up. I look at an emerging opportunity and I pick it up. That's the emergent approach. Third approach is logical incrementalism. So this approach suggests that strategy is a small scale extension of past policies. So whatever is your current strategy, in the next year, you will slightly adjust it based on inflation, based on cost, and all of that. So it's saying that strategy is step by step, small changes. So for your organization, if you want to suggest step by step, small improvements, you can choose the logical incrementalism method. The advantages are it's acceptable to stakeholders because there is no real change, so they are not surprised. It's small changes. It's less of a cultural shift. That's right as well. There are disadvantages also. So the disadvantages are that there is no overall long-term plan. You're only looking year after year. It may cause a strategic drift for your organization, which is not really good. The fourth and the final planning process which you can use for your organization is freewheeling opportunism. So over here, you have no plan at all. You only look at opportunities in the market and take the opportunities. So remember, emergent approach is where you have a plan that you follow. Only when you see an opportunity relevant, you take it. For freewheeling, there is no plan present. Whatever opportunity in the market, you adapt. So the advantages are that it's time saving. There is no real formal planning. It's better for organizations in fast changing industries like pharmaceuticals or technology. So let's say your case study is a company in the pharmaceutical industry or in the technology industry. You can keep in mind the concept of freewheeling opportunism and state it in your case study. You can say that for an organization like ours, where it's fast changing, a freewheeling, decentralized organization is what I suggest. So these are methods which are given to you, but you will have to see which is best for your company. The disadvantages are obviously there can be a strategic drift, there is no long term plan, there is failure to identify risks, and you are heavily dependent on management skill. So, to summarize, if you are looking at formal planning, then companies which are in stable industries are suited to formal planning. So, if you are looking at formal planning, think what is your case study company been given to you, and then see if it's a stable industry, not stable industry, and you can suggest accordingly. So more formal planning is suited for stable industries where there are inexperienced managers. So there are set guidelines. Informal planning, on the other hand, is for fast, dynamic, changing industries and where there are experienced and innovative managers. So I would say formal planning, you look at rational and emergent approach. Informal planning, I would suggest incrementalism and freewheeling. Keep this in mind. Remember, you will have to make it specific to the company that is given to you as part of the case study. So next, we are going on to one of the more important and favorite exam questions. It's corporate governance. A lot of more detail about corporate governance is present in your P3 studies. When we eventually get there, we'll deal with it. But over here, we are going to go through the gist of corporate governance. So, corporate governance is simply how the company is being controlled. Remember, if it's the case study exam that you're studying for, always remember any topic that they ask you, your job is to first introduce that topic. So if they ask you strategic planning process, you will introduce it. If they ask you corporate governance, you will tell them what it means. If they ask you business valuation, you will tell them what it means. First job is to introduce the topic. So corporate governance is the way the company is run or controlled in the interests of the shareholders and stakeholders. So the primary purpose of corporate governance is to monitor parties within the company who own, who control the resources that are owned by the investors. The investors are the owners, but the directors are the people who control these resources. So the primary purpose of corporate governance is to make sure that the directors are kept in check. Secondary purpose is to ensure that there is balance of power. Remuneration of directors is good. The board is responsible for risk management. Executive and non-executive directors, all of that is controlled. That's the secondary purpose. On the other hand, the objective of governance, what it wants to fulfill, is to make sure that everybody trusts the company. Everybody, there is value to the company and accountability is added. Secondary objective is making sure that more reporting, more disclosures, more transparency is achieved. Now, this is the purpose and the objective of corporate governance. Whenever they give you corporate governance, obviously you will first introduce the topic, but then try to link it to the UK Corporate Governance Code. So, what is the UK Corporate Governance Code? You will tell them that, you know, uh, generally what is assumed is no matter what country they give you as part of your pre-scene, they will tell you that the corporate governance code of UK can be followed. So whenever you are analyzing the board structure, whenever any corporate governance question comes up, you can tell them that the leadership code is not followed because the leadership code states that the CEO and the chairman must be two different people. You will check for your organization if they are two different people. If they are two different people, then okay, good. Second, effectiveness. You will look at the balance of skill on the board. Are different directors from different backgrounds? Do they have the skill to run the company? If they haven't, okay, tick mark. Third, accountability. Balanced and understandable assessment of company's positions. So directors must publish all necessary information for shareholders. In other words, there must be an audit committee present. So accountability is equal to audit committee. If there is an audit committee, tick mark. Fourth, remuneration. Is there a remuneration committee present? If there is a remuneration committee present, again tick mark. On the other hand, the last one is relations with shareholders. So, encouraging participation. Are we listening to the shareholders? Your annual general meetings, how often are they being held? So, remember, whenever corporate governance is given, try to link it to your company. See whether your company follows the code. If it does, it's a well governed company. If it doesn't, then suggest what can be done. A lot more detail about this is coming in P3, but this is an introduction that you must keep in mind. So, why is there so much focus on governance nowadays? First of all, it's because of increasing power of governance bodies. The government is giving this a lot of importance. There is greater scrutiny, there is increasing shareholder power, there is greater pressure on the board to formulate a strategy, and greater scrutiny of mergers and acquisitions. So that is why there is so much focus on governance issues. And corporate governance obviously impacts your organizational strategy. Why? Because it will tell you that put this committee in place, put this committee in place, make sure the directors are skilled, make sure the directors are independent, make sure there is a diverse board, adequate internal audit, external audit, audit functions. So, bringing in corporate governance, yes, as a rule system or as a principles based approach really helps because it defines how the company will be run. So it does affect the strategy of an organization. So if in the case study exam they were to ask you, how will corporate governance affect the company, or how will a well-governed company strategy will be affected by corporate governance, you can bring this into picture. So you can do this with the help of our notes and because of this explanation that I'm giving you. See, I'm only trying to make sense of everything in a very simple and easy word way so that no matter what the question, I can mold it, I can use my knowledge to explain them the scenario. Now, remember, at the end of every chapter, I will give you learnings from that chapter. These are the most important parts of the chapter. These have already been covered by me. We have already explained you the same. But now it is your job to read the learnings, quiz yourself, make sure you can come up with an explanation for whatever is being asked. So, if there is a question on what is the system of corporate governance, you should be able to recall. The corporate governance is how a company is run, there is objectives, there is purposes, and then there is the UK Corporate Governance Code. So treat this as trigger points. Treat this as something which will help you revise chapter 1 at the end of every chapter. This has been given to you. So this is where you really consolidate your knowledge from the case study perspective and then you move on. So hope this explanation has helped. We are now on to chapter number 2 in the next video.